It does take us to our talk of the tape. With stocks trading around record highs, is it time to lean into this bull market or step a bit back? Let's ask Ann Sonders. She is Schwab's chief investment strategist, and as you can see, joins us live. It's nice to see you again. Welcome back.
Well, thank you very much. Happy Tuesday, Scott.
Yeah, you as well. What do you think about that question? Time to lean in, or maybe take a few toes out of the market?
Well, we have $9 trillion of client assets. I'd ask, who's the client, what the structure of the portfolio, whether they are on some sort of periodic rebalancing schedule. I think periodic rebalancing is just a beautiful exercise, especially if you make it portfolio based as opposed to structuring it simply around the calendar, which a lot of investors do. And it forces us to do a version of what we know we're supposed to, which is add low and trim high. So I think that's always an important part of the discipline of investing, is that rebalancing as opposed to trying to time the market in the short term.
Sure. You know where I'm getting at, though. We've had a great rebound from the April lows. Does it feel like there's more to go to this bull market?
Yeah, but I think that there has been a lot more churn under the surface that I think helps maybe tell a more accurate story of all the uncertainties with which we're very familiar, whether it's Fed policy, inflation, the backdrop for the economy, some signs of weakening in economic data. You talked in the lead-in about the NASDAQ. NASDAQ is up 10% in the past month, hasn't had more than a 7 or 8% drawdown, maximum drawdown year to date. But the average member within the NASDAQ has had a 35% drawdown. So there is a lot of rotation and churn going on under the surface. You just have these cap-weighted indexes biased so significantly by some of the mega cap names, not just the Magnificent Seven anymore, that's keeping the indexes afloat. But there is a lot more churn under the surface. Is it interesting that you're starting to see small caps try to, claw their way back into some semblance of a short-term leadership position? So I think the market has the potential to broaden out a bit here, but we do need earnings to continue to come in well, because last year was all about multiple expansion without any benefit from earnings. I think earnings do need to continue to catch up to where multiples are.
Well, you give me a perfect segue to NVIDIA. I mean, I know you don't talk individual stocks, but I know you're thinking about, because everybody is thinking about what the implications. Yeah, what the implications are of this earnings report tomorrow. What do you think's really riding on it?
I mean, I'm not going to talk about whether they beat or not, but clearly the whisper numbers continue to edge higher. It is important to remember that, the overall tech sector has a blended earnings growth rate, meaning all the companies that have already reported their actual results blended with the companies that have yet to report of, I think it's 23 or 24% for the sector, but that drops down to 11% if you just exclude NVIDIA. So that's just a numerical way to see how much is riding on this. And, they continue to beat every single quarter. But, we have to, I guess, be careful about extrapolating as far into the future as, years from now. So could it represent a risk at some point just from an expectations bar perspective? Yeah, but whether that's tomorrow, I have no idea. I'm not an analyst.